Earnings season is officially upon us, and we had some of the mega caps reporting. One of the most notable names is Alphabet, ticker symbol GOOGL, or Google as it's commonly known, and the stock is up 1.86%. The market likes its earnings, and this is after about a 20% rally in the last 14 days. So we're going to talk about Google, everything as it pertains to their earnings, AI, and the AI trade, and what it means for you as an investor. And we're going to discuss, is Google a buy right now? But before we do that, if you could please go ahead, like and subscribe. It really, really helps me out. Now, you guys know exactly what Google does. Its primary function is to organize the world's information and make it universally accessible and useful. This mission is primarily achieved through its search engine, Google Search, but also encompasses a wide range of other products, and it monetizes these mostly through advertising, but it's also in the cloud computing space. It has many software and services. It has Android, it owns Gmail, YouTube, Google Workspace, the G Suite. It also has a hardware division with the Pixel phone, which is very popular, might I add. And it also has an artificial intelligence arm. Now, looking at the earnings, Google beat on the top line and the bottom line, beating the analyst expectations, growing revenue 13%, growing EPS 19%, double-digit mid to low teens growth, $96 billion in revenue. Absolutely insane. That's for a quarter. That is insane. It's just so much revenue. That's like $1 billion a day in clean hard revenue for Google. Looking at the overall picture, diving into the quarter, more specifically, gross margins actually increased ever so slightly, and net income margins increased ever so slightly. That's a good thing. However, when you look at the free cash flow margins, which is ultimately how I value companies, I really look at either free cash flow or beta, one of the two, but I really like free cash flow. Free cash flow fell significantly, and this has to do with capital expenditures. We'll talk about that a little bit later on. You can see a free cash flow went from $13.4 billion to $5.3 billion. So the capital intensity of this business really ramping up. However, when you look at the actual operations of the business, you look at net income, right? The business is still chugging on as per usual. Net income went from $23 to $28.1 billion, and the balance sheet still looking as good as ever. $35 billion in debt, $95 billion in cash to offset that, on close to $100 billion in revenue every single quarter. Very solid balance sheet, very solid business. The business continues to grow. Margins continue to expand, especially in gross margin and net income margin. To be honest, I would say that this was a pretty solid report in aggregate. Looking at the income statement, revenues grew 14%. The expenses only grew 13%. And as a result of that operating leverage, net income was up 19%. Looking at the segmentation of Google, you could see right here that Google Search and other, right, grew 12%. That was actually an acceleration because Google Search actually grew 10% in the previous quarter. YouTube grew 13%. That's also an acceleration from the same quarter last year. Last quarter, YouTube only grew 12%. You can see here that the Google network actually fell 1%, and then subscription, platform, and devices grew 20% year over year. Another acceleration, which grew 19% in the previous quarter. So we saw an acceleration in Google's entire business. Now, this doesn't include the Google Cloud Platform or just their cloud revenues in total. And now you can see here their cloud platform grew 32% versus the 29% in the same quarter last year. So an acceleration. So what we really saw was an acceleration in all of the revenue segments except for the Google network right here. And that's a relatively small segment as well. Absolutely insane when you think about it. So it really looks like all of that capital expenditure spend is paying off in ROI because revenue growth is accelerating right now. And I think that is part of the reason why we actually are seeing Google a little bit higher here in the after hours. When you actually look at the operating income, margins expanded significantly from 11.3 to 20.7%. And we're looking at a quarterly operating income of about $2.8 billion, and do expect very much of the same. Expect margins to continue to expand to that 30% region, and expect the segment to continue to grow at this very, very blistering pace over the next coming years. Google Cloud will be one of the biggest cloud providers in perpetuity in the world. Here is Google Cloud's revenue growth. You can see the acceleration right here, accelerating from the previous quarter and the last couple of quarters. However, still well below what we saw in September 2024 of 35% growth. Nonetheless, momentum for this segment is really, really good. You can see growth deceleration plateaued, and it's actually accelerated since September 2023. Now, guys, looking at capital expenditures, this is why free cash flow shrunk significantly from the same quarter last year. Free cash flow, capital expenditures increased 70%, and this is likely to continue. Last quarter, Google came out and said our capital expenditures for the next 12 months will be $75 billion. They increased that to $85 billion. And I just want to point this out, guys. When you see a company do that, nobody spends an incremental $10 billion in capital expenditures because business is slow. Nobody. So they're obviously seeing stuff that's warranting that increase in capital expenditures to further go out and build out, data center hardware to get the people they need. And here's some comments from Google's CEO. He said Google's AI chatbot, Gemini, now has more than 450 million monthly active users, and AI Overviews, the AI-generated summaries that pop up automatically at the top of Google search results, has over 2 billion monthly active users across 200 countries and 40 languages. That's what Google CEO said on the call. And when you compare everything I just told you about, guys, what we see is AI CapEx is increasing, AI cloud and apps accelerating. Ads are actually doing really great. We saw growth across the board, and CapEx ROI, or the return on investment of CapEx, is starting to become visible in the business. By extension, growth is accelerating across the board. And I have some notes here. Essentially, what we saw was a big beat on cloud and a beat on ads. In my opinion, that's basically pristine. That's what you want to see with Google, right? A beat and acceleration of growth. The reaction was less than anticipated, but the stock is up 20% in the past month. CapEx increasing could be the reason why we saw a little bit of volatility in the after hours, but AI winning turns into a CapEx boom, like we saw with Meta. And Google is starting to show that they are winning with AI. And if that is the case, increasing CapEx is going to be good for Google, good for sentiment. And who doesn't want to see Google spend a ton? This is quite literally the best ROI period in recorded history. And Google is showing a clear ROI with cloud accelerating, YouTube accelerating, Gemini accelerating, AI overviews, 2 billion monthly actives, Gemini adoption, benchmarks, cloud revenue accelerating. All of these are climbing, right? There's a big narrative shift incoming, and I can definitely see Google closing higher by the end of the week and potentially all-time highs by, the end of the year sometime. So let's actually talk about valuation, and is Google a buy right now? Now, it does look cheap, relatively speaking. It trades at an 18 times forward clip, 13.8 times EV to EBITDA, and a shareholder yield of 3.47%. And this is how I see Google kind of panning out. Now, I try to get a 10% return here for Google at minimum, right? And to do that, we just use 9% revenue growth, which it looks like revenue is accelerating, but that 9% is consensus. We're using 37.9% EBITDA margins. And if we plug that in, we get $216 billion in EBITDA by 2029. If we apply a 17 EV to EBITDA, right, the current multiple is 15. And I don't think 17 is crazy for Google. You get the enterprise value, subtract the net debt, divide by shares outstanding. You get a 2029 stock price, 307%. The current price is 190, and that's how you get a 10% return over the next 5 years. Now, technically speaking, Google is trading well above its fair value, but this is with a 15% discounted rate. And I think this is probably the absolute base case. So is Google a buy right now? Technically, you probably could just go out and buy the S&P 500. However, Google is clearly executing. And if this continues, I think you can definitely see upside to these revenue numbers, definitely upside to these margin numbers. And that would mean upside to the overall fair value and projected returns. But as it is right now, if Google was to trade back at the 152 area, that would be a great place to buy. A company like Google, such a high quality company, you generally always want to buy it at fair value. This is what the analysts think. The analysts think that the low is at the 160 range. So if we trade back to that 150 range, this would be a great place to buy. The average price target on the street right now is $206. The current stock price is about $190, and the high end sees a $240 price target for Google, well above its all-time high, which is close to about that 210 level. Now, looking at Google on the technical charts, Google has really done much of nothing for the last, I would say, year or so. It's sort of traded inside this range. You could see it is approaching its all-time high right here. But generally speaking, when we've got it to these highs where Google is approaching, we have seen a little bit of resistance. However, this earnings report could actually mean we could go higher. So ultimately, I think if Google is to trade lower, maybe on the back of seasonality or tariffs or whatever, right? If Google is to trade lower, I would look to actually go ahead and buy Google, especially if you can get it, at the 180 mark, potentially 170 $30 mark, I would go ahead and buy it. But I do think Google's going to go ahead and take out those all-time highs with regards to this earnings report. It was actually a very solid report. Apart from free cash flow, Google is literally firing on all cylinders. And I do think all-time highs are coming sooner rather than later. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.